the market in gold here came down to a buy one level of 1815. Actually, it came down to the annual average price of 1810, and you can see that we are reverting from that buy one level. We have reverted also from the 1810 level, and we have tested that successfully here again today, which is the annual average of 1810, and the market is reverting back above the buy one level. So it's activating a bullish annual price momentum and a daily buy trigger at 1815. I want to mention a couple of things here to some of my traders here in my live trading room that still are confused when I say take profit on the first $300 that the market makes. And, when the market it runs up like it did this morning from 15 to 20, there should not be any questions at all about you taking profits. There should not be any questions about should I take some profits. You establish some day trading rules that you need to follow the discipline, particularly when the market gives you the opportunity where it runs up $5-6 right away, and there should not be a question about you wondering what to do when you're day trading. If you get a chance, you get a $300 right away, you take it. If you have multiple positions, you take the first contract and you trail the balance with a stop. Don't just sit there wondering what to do, because the code tells you exactly what to do, and the artificial intelligence behind the algorithm is guiding you in terms of how you should manage your profits. The algorithm is not going to tell you how to basically put the money in the bank. You have to use money management, risk management according to your profile. So once again, to those traders that are working with me in my private trading room, or even here in the open forum in my live trading room, if you enter a trade, a signal, and you get the opportunity where the market gives you a $5 or a $10 run right away, where the momentum runs right away, if you're doing multiple positions, take the first $300 out. Raise your stop to break even. day trading market in silver, and you can see the market coming back down again to test are taking place here. This is a 90% probability to the relative implied volatility to the mean, which is at 1832, which is a 50-50 standard deviation. So you're looking at about a 50-90 standard deviation and a 1-to-1 factor from the buy one level of 1815. Let's see the kind of trading that goes on here. So if you carried your position with a trailing stop, you got stopped out. Right now, you went back to neutral. But if you took out the first $300, you'd be ahead $300 for the day that you can use to go on if you get another signal. And if you want to enter, you can take that signal. What you'll see is a good synergy at this level. $15.5 trading, so it's finding support again. You can re-enter the trade on a close at 7:15. If it closes above it, you can re-enter. Getting some buying coming in here. 17 bits. So we are getting some buy-in from this buy one level again of 1815. You can re-enter the long side on the close here, 1860.90. And conservative traders can put your stop below at 1815. Automatically, the target above, whether it's weekly or daily, the level above becomes the target. So the target becomes 1825 to 1832. Your protective level is 1815. The silver market continues to show more resilience than the gold market. And it reverted only from the daily average price of 2704. We might have seen some short covering on this rally here on this bar in the gold and the silver market at this level. So I think people are beginning to see that the gold market is really having a hard time coming down is the bottom line. Every time that it comes down into these levels here, we experience some good buying. And so there is a lot of interest to buy the market on any corrections. And we've come down to this 1810 level now several times, which is the annual average. That is a 50-50 standard deviation. Trading above 1810 basically projects the annual average at about 2164. The key number that we're watching here in the gold market, I think, is going to identify pretty much the shift in the trend here is a close above 1874, which is the monthly level. We've come down to the annual yearly average of 1810, as you can see, back in February, and we rallied from that 1810 to 1856.60. Could not really get to that 1874 and found basically supply at these levels here. So it reverted back down to where we are right now, which is basically testing the yearly average of 1810. And we've activated a buy trigger, actually, or a buy or a bullish annual price trend momentum. The 1810 is the level that negates this bullish trend annually. And this bullish trend annually puts into place the 2164 target during this calendar year, which started back in September. September 28, and we published an article in Seeking Alpha on September 28, basically providing these numbers to our subscribers. We've been in a trading range basically from the recent high that we saw of 1962 back in January to this 1781 level that represents the 2020 low. We've came down again to test this in February to a low of 1830, not quite making a new low, and we are reverting from this level. What you see here is a descending wedge, this resistance trend lines that come all the way down here since the high of 2107 was made back in August, bases the April contract. We're trading April gold now, and this is the relative number that is used now for this contract as a high. And so 2107 was the high in August, and we've been in this consolidation that you see here since. Try to once again come down and test this low underneath the annual average and revert it right back up from that with very strong buy-in. This is very strong buy-in from here, but this buy-in obviously was met again by supply. 1942, the monthly was telling us as we came into this month that that was a level to unload some profits, or to expect, you might say, some sellers, some supply coming in. And you can see here, that's exactly what happened. And the market reverted from the supply area or distribution of supply identified by the VCPMI, and now it's trading at the extreme level below that monthly average of 1781 that was made again on the 4th of February. And this is the bottom. This is the level that we are now using as the basis for this next move up. As the market begins to trade, as you can see, into this wedge pattern, it's narrowing its vortex, so to speak, in terms of price, creating a pivot point or a vortex that if we get up above this descending channel trend line resistance, we're going to accelerate to that 1874 level. And the key on this move here is a close above 1874. The bottom of the range is 1810. If you remember, we came down to test at 1800 level there. Again this year, could not get down there. And now we're finding that the market is trading now above the annual of 1810. So we're beginning to see a rollover into the trend on the market. The cycles have aligned themselves harmonically into the 1810 area. On a longer term basis, this what it means basically is that the 1810 to 1874 is the trading range. You buy 1810 or lower in terms of a trade, you sell 1874. That is the trading range. And the close above 1874 is going to accelerate the bull market. And so we've been trading in this range now pretty much since the beginning of the year. And the interesting thing here that I want to point out to you is that as we came in at the beginning of the year, we had tremendous expectations that this market was going to explode as a consequence of the stimulus. I am so tired of hearing stimulus. Everything is stimulus. And the market is not being stimulated, is my point. All this talk about money coming in, all this stimulus, market yawned at 1942 and said, no, we're going to go back down and we're going to test those buyers that bought the market early in the year and see what kind of strength they have to hold their positions. From 1942 to 1785, that's a pretty nice range. And most bull or most buyers at the beginning of the year are extremely frustrated. This is exactly what I mean when I say the program, the system, the algorithm is a contrarian indicator. Particularly when you get the sentiment, as we did early in the year, to buy the market is going to explode, stimulus. It met the target, expected, reverted, kicked in the signal to go short on January the 6th. And this is exactly the day that Washington was raided. Unbelievable that you would think, not only because of the economics of all this stimulus coming into the market, which is going into pockets of, or sectors, you might say, and you're beginning to see the raid of Reddit now that has become a force of demand in the market, is raiding a lot of this aggressively shorted stocks and obviously anything that they feel they can move the market. And I think they are in for a major awakening in the way that they feel they can trade these markets. The big players now are aware of this new phenomena, you might say, of real traders getting together through technology, so to speak, and combining the volume of their buying power into one big unit that can make an impact in the markets. That's amazing that at least the small retail investor has a way of trading, protecting their interest, as opposed to being raided constantly by all these hedge funds and central bankers. So this sentiment, the central bankers, which are the ones that essentially short the market now through that category, obviously, probably there are some major traders that fall under that qualification of commercials, and you really wonder, who's behind that category that essentially are carrying historic short positions against the metals markets, against the silver market in particular. They have increased their short positions now, I think, to $38 billion, according to the Commitment of Traders report. And of course, instead of the price rallying, they are able to manipulate the price now back into the annual average. A good $40, $50 move and drop can really upset you as a trader if you were looking for the explosion to occur. And of course, the market came down now to the average yearly of 1810, and obviously a lot of stops, a lot of pain occurred since January. Now, in terms of where we are in the market here, the point is that the market in gold does not trade on the fundamentals. The market in gold trades based on its own technicals, based on its own reversion to the mean principles. The players in the gold market understand the psychology and sentiment. And they are in a financial position where they can make a difference and affect price by the amount of contracts that are shorted against this demand, against this buying demand. And, point in case, when we came in a couple of weeks ago on a Monday after the a Reddit or the Wall Street bets, recommending that silver was going to $1,000 that following Monday, the silver traded $30 and collapsed. Gold traded not really that much relative to the silver market, but 30.35 was the high made, and that was it. All that buy-in frenzy had no muscle to go against the central bankers. And the move in silver actually based on the attention that it got worldwide, where it was on the internet and everybody was talking about it, should have gone further. It only went up about 10%, and I think we should have seen a 10 to 20%, a 15 to 20% move at least. But it went up into that weekly sell one level of 29.61, and that was it. It put in a top, a reversal top that activated, basically testing the mean and the extreme below the mean. So what you see here is the markets come down from there and into the area of what the AI calls accumulation of supply. This is the area where you want to be looking to buy when the price comes down into these blue levels. Expect buyers to show up. And when the bar tests these levels and reverts back up above, is confirmation that a reversion has unfolded right into the target, the mean, the resistance, and you can see market trading coming down again into the levels indicated now by the daily of 26.74, which was a buy signal yesterday. So what we see here using the 15-minute bar is that we are trading in a bullish mode, activating a buy signal from 2674, 2704, 2734 is the target for the day, the initial target for the day, and the sell to level is 2764. I think this move down here today was very important, and we've been looking at 1810 when the market pretty much came down, and we've been hedged. We've been recommending to hedge on this correction here by buying dust or buying, synthetics, covering your position, depending upon your profile. And I'd like what I see here, that we came down again into the annual, tested it, and we're turning right back up again. So we're beginning to see the rollover from the daily initiating the turnaround. And I think once we get up above the 1825, which is the weekly average, then we're going to negate the weekly bearish trend momentum that this is in accelerate into the target daily of 1832. This level 1815, 1810, 1805 look very strong levels. If we get a close of 1825, again, that is going to reinforce the completion of this correction. And so, as you can see here, I have not discussed stimulus in any way, shape, or form, because truly all that information that you hear is already factored into the price. It's already factored in the market. And that's the reason why we saw this reversion. Now, I can tell you just from the frustration that I hear out there, the market might be getting ready for a turnaround, is what the AI is suggesting as we trade into this 1815 level. From 12:15 a.m., we've been bouncing off this level, even coming down and testing that annual, again, average of 1810. So I'm pretty comfortable that the longer the price stays at this level, the more nervous the shorts are going to be, and we'll begin to cover their short positions. And we'll see that reflected in the bar right away. Platinum and palladium, the other metals, are in a bull trend. And I think they're leading the way. 1128 was the high so far. So, it 562 actually was the low. We're looking at, back in March, and it's 1,128. So we do seem to be getting a turnaround pretty much across the board in the precious metals. From a very, very, very important level, the annual average, and right below, obviously, you're looking at the monthly, the monthly by 1, by 2, and the 9-year cycle is supporting this price is right underneath, all the way down to about 1678, which I don't see that price being activated anytime soon. But anything is possible. If this thing fails and closes below 1810, it increases that possibility. But so far, it looks like we're getting buyers in here, and we are about to break out, as I said, from this descending channel, and crossing above 1874, it will validate that this bottom was completed. If you went long here, just continue to hold that long. If you got a couple $100 in there from the initial entry point, just trail this stop to break even. And, depending upon the multiples you have, again, if you get a $300 profit, you just keep taking it. Even if it trades right around this level back and forth, and you get executed enough that you produce those gains, take it. 3-4 trades at $300 each, can add up quite rapidly. 1820 bit. Good buying in the market coming in here. Picking up some momentum. 1819 would accelerate this a little more as we basically be trading above this trend line. 1880 traded, 1890 traded, 19 bid. You can see the buy-in coming in. And, again, you don't have to be wondering, because the VCPMI clearly identified these pivot levels for you to execute and enter. 1910 traded, fast market in gold. 1960 traded. This is what you call the resolution of the variable changing price momentum indicator, a probability model that identifies signals with 95% probability. The signal from B1 activated has a 90% probability every time we get a buy trigger from here, until the market resumes the momentum from the signal, and the targets above are completed. You can see 1940 traded, 90 traded, 1820 bid, fast market. Fast market. If you bought it out early, again, at the 16 or 15 level, that's where you put your trailing stop. And, you know, if you make, let's say, for every $300 that you make, you can raise your trailing stop by that amount. 20, 30 bid. We're getting a lot more support here from the silver, up 18 cents, 27.23. 27.34 is the target for the silver, the initial target, and 27.64 is the sell to level. Fast market in gold, 24.50 traded. Now you're beginning to see the beauty of the resolution of the variable changing price momentum indicator in a real environment, a real account, live streaming here in TikTok. We are approaching a little bit of resistance here on Bollinger Band at 25.50. You have almost $900 profit on this trade. Make sure that you keep protecting the profit. And you know, if you're long at 26, it's at 25.50. That's almost $1,000 profit on this trade. Continue if you want to hold on to it until it reaches the target, trailer with a stop, or lighten up, take some profits, depending upon your multiples. $28.50 traded, pretty fast markets, as you can see here now. The market is accelerating into the momentum. The target here is, again, 27.34 on silver. That's about a 30-cent move from the mean. Here we go. Target completed, 27.34. Target completed. Take profits on the silver here. Take profits on the silver if you went long. This gives you a tremendous opportunity to lock in profits here and to hedge. If you got multiples, you can sell half of it here, hold on to the other half until the next target, which is 27.64. Forty and a half. Wow. This is what you call momentum. This is the resolution of the algorithm. Perfect example of the reversion to the mean. Target completed on gold, 1825.80 on the weekly average. And now trading above the average is going to go into the target of 1832 daily, completing the daily. And a close above 1832 is going to bring in all the weekly uptrends and the daily uptrends, and the world will begin to buy. 1826.70. This is a perfect example in a live trading, live streaming account where you see the resolution unfold like magic. The VCPMI will take you there if you are disciplined in following the rules, if you are disciplined in executing what it recommends in terms of the trading strategy. And what I'm recommending here, my traders, my subscribers, in my private trading room here, that if you took a profit out in the futures contract, roll that profit right into another asset that you can buy and hold. Take your money out of the futures trading that provides incredible liquidity and put it in a longer term asset that fits your profile, that is not margin, which could be a stock, which could be an ETF, in the same area. We got a fast market in the gold here. This is phenomenal buying coming in here. 1832 next is the target. $28.80 fast market. Yeah, we got a really fast market in here, ladies and gentlemen. This is a major breakout reversal going on. This is exactly what I was saying to you, that in terms of the sentiment, it was prone for this to happen. $31 quarter, almost 32. And if we get above 32, then we're off to the races to 1842. This is the magic of the reversion to the mean principle that identifies for us the reversions where they should unfold and where we could see buyers come in. And we've been talking about the 1810 level as the average that we're looking to cover our short positions. And we've been very fortunate that we got that opportunity to do it today. Congratulations to those that have been following me here. I know it sometimes it's a bit of a challenge to be able to really feel comfortable and trusting this, but I've been doing this, following this for at least 15 years, and it's made a difference in my trading. It's made a difference in my life, and it's made a difference in traders that learn to follow the discipline of the variable changing price momentum indicator. Thank you once again, ladies and gentlemen, for the opportunity to show you how this incredible tool works in real time. And I really sincerely hope that you come here every day and you become a better trader. I'll talk to you soon. Be careful. I'll see you next time.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.